Hi guys, and welcome to this week's mentorship, where I'm going to look at dollar index. I'm going to analyze dollar index and share with you guys my my forecast on where I anticipate dollar to trade to, what I expect dollar to do in the next coming, say, 2 or 3 months. I'm sure you already know that I normally do this beginning of each and every quarter. So now, as we are starting the third quarter, right? We are into the third quarter now, July, August, and September. We've got a new candle that opened 2 weeks ago. So that's what we are going to talk on regarding what I expect dollar index to do for the next quarter. So there's quite a few things to look at, but most importantly, interest rates. The talk about interest rates is not going away. Whether the Fed should now cut the rates. The talk of Powell being under pressure from the administration is also not going away, with potentially someone to replace him already in line, already known to those that are supposed to appoint him. So that's what I'm going to cover, DXY in a nutshell, and what I anticipate dollar index to do, right? So we also have to keep in mind of things like the COT report, how we have seen the net positions for the commercials leaning also towards the longs, and shorts having a bit of a struggle in maintaining the downtrend. You see, so it's those things that you have to keep in mind as we are looking at dollar index. And also there's a couple of fundamentals that are forthcoming in this week and the week after that might have a big impact on how dollar index is going to react, and how it's going to give us a clear picture of whether the downtrend is going to continue or the downtrend is coming to an end, basically as in a complete reversal has been achieved. But looking at, say, the technical chart, one would argue that the downtrend most probably is about to accelerate to the downside, but also there has to be a bit of a redistribution into fair value before another continuation, targeting most probably 95, 94, ultimately the 90 price points, right? So from a technical point of view, looking at the price action, you can clearly see we've been in a downtrend since January, which is something that we highlighted in previous focus for dollar. We've been in a downtrend, and all the way second quarter market has moved to the downside, right? So with that in mind, we need to take note of the month of May, the lows for the month of May. You see, we need to take note of that. Reason being that it forms the base of our imbalance, right? The imbalance between the current high and May low. So the current high is coming in at around 98.136, and the lows of May are coming in at 98.694. That becomes crucial now to our forecast, right? So this is the current high for the month of July, right? That's the current high for the month of July. Now, this is on the monthly chart, guys, right? This is on the monthly chart. So if we are to go, say, on a lower time frame, and let me just make sure that this is precisely to the pip. If we go, say, on a daily time frame, you can clearly see those two lines that I've marked, and from there you can see we've got our bearish OB and we've got imbalance here, which we should anticipate price to fill up before another acceleration to the downside, most probably mirroring this expansion here. You see that expansion, say, on the daily chart. One can also apply fibs, swing high to swing low, right? Just to determine, say, where the premium price action is. See, that would be your premium zone. You see, I've done this just on the daily chart without even doing anything, say, out of the norm, just your basic technical analysis, right? So I'm going to go to the monthly chart, right? Now, some could argue that we should have marked, say, the lows of April. Yes, that could have been also an ideal old low to use. But look at June. The way June decisively closed below April and May, right? So the May lows becomes your point of focus, because if we just include the low of April, it means there's still imbalance left to the upside. So that short position, or the zone where you anticipate price to go to the downside, might be a bit immature, might be too early, right? So you find out that you get stopped out because price will continue moving to the upside. So you can see clearly that the month of July right now is redistributing into fair value. I still maintain we could see further lower prices during the month of July, but only after we have traded all the way to 98.70, right? Say 98.70 as in the lows of May, right? So you're talking of 98.694, just round off to 98.70, which is our institutional price point, right? So that's basically like the premium points of interest on the monthly charts. And in terms of target, clearly have the current old low, right? The current old low becomes your point of focus in terms of sell side liquidity, right? You'll be anticipating price to trigger those sell stops on its way to the downside. But also look at this uptrend here, the swing, the expansion that we got from May 21 all the way to September 22. These down close candles here, they are going to provide also the draw on liquidity, right? These down close candles, it's areas where if you are in a short position on DXY futures, those are areas which will be of interest in terms of targets. So I'm just going to highlight the month of December 2021 as a potential draw on liquidity, and price should find a bit of support when it gets to that level. So those are the two points of interest on the monthly chart in terms of the draw on liquidity, where price is gonna trade to. Now when we go to the weekly chart, right, when we go to the weekly chart, things become a bit interesting now. You see, we've got our bearish OB right here, right? I'm just gonna mark that out. So that's our bearish OB, right? Now this bearish OB, we've got this huge expansion to the downside. That's where I applied my fibs when I was on the daily chart, and price is approaching the premium zone. If I click to the daily chart, you can see that's where we have the daily bearish order block. So OTE probably somewhere around 98.51. You see, that's where your OTE is. Now I'm just gonna go back to the weekly chart. All right, so I'm anticipating a move like this here. See this down close candle 1, this huge expansion 2, and potentially this one, right? We should get a weekly candle like that, whether it's this week or next week or the week after, I'm not sure, but we are going to get a candle like that anytime soon. You go to the calendar, that's where you go to the calendar now. You look at fundamentals that are going to affect, say, dollar predominantly. So let me just okay, no, I don't want to disturb my filters there. So you see here, tomorrow we've got CPI, which is the start. You see, CPI focus is already at 2.6. That's something that's going to move dollar. That's one high impact fundamental that is going to move dollar. And 2.6, chances are very high we might even get 2.7, right? Because inflation lately has been going up, energy prices all going up. The conflict we saw a month ago between Israel and Iran, we are going to start seeing the effects of it going forward. So if we do get a higher inflation, what does that imply? The Fed are going to keep higher rates, and dollar is going to keep going to the downside, right? Then we also have PPI that's on Wednesday, and heading to Friday. Friday we've got the Philadelphia Fed Manufacturing Index, and then we've got retail sales. And looking ahead to say next week, you see what I'm doing, guys, is I'm just highlighting the fundamentals that I anticipate dollar to have those big expansions, most probably going to the what? To the downside. Then next week we've got what do we have? Manufacturing PMIs, service PMIs. Those are huge fundamentals that can move dollar. We've got existing home sales. Those are fundamentals that are going to move dollar. And we mustn't forget about Trump. We mustn't forget about Trump and his sudden or out of nowhere tweets, out of nowhere press conference. And whenever he talks, then you have to keep in mind or listen to what he's going to say regarding, say, Powell, for instance, because Trump wants lower rates, and the Federal Reserve is saying no, we cannot cut rates at this moment. So all this redistribution that we are seeing here in fair value, that's Trump trying to boost a dollar, right? He wants lower rates, but inflation is saying something else. That's why the Fed is keeping the rates where they are, because if inflation starts coming back up, then the Fed will have a reason to justify them holding the rates to where they are, right? So on the weekly chart, in bearish market, we anticipate up close candles to provide what? Resistance. Take note. That's something that we have been learning about ever since. So in bearish markets, we anticipate up close candles, especially the last up close candle before an expansion to the downside. Last up close candle, expansion. This is the last up close candle. Then we have expansion. Look at this one here. Where did it find resistance? Inside this last up close candle before the expansion. Look where we are currently right now. This current weekly candle is now trading inside. It hasn't reached the volume or the body of the last up close candle before the expansion to the downside. So anticipate this current weekly candle to trade into this weekly bearish OB, or even the following weekly candle, right? Now with the following weekly candle, that's where you have to put into context, say, the COT report. You see, you'd want to see open interest gaining momentum at a time when they're either taking profit on their longs, and adding more shorts. You see, that's the kind of scenario that you'd want to see from the COT report. So as it is, guys, I'm still bearish on dollar, right? But there's also signs out there that are signaling that maybe dollar has now found a floor. But the main catalyst to that is most probably Powell's replacement or the Federal Reserve cutting rates, and we don't have them anytime soon in regards to their meeting. I think end of July, that's when we get FOMC onto the calendar. So yeah, I'm still bearish on dollar index, and with that in mind, means I'll be long on euro, pound, AUD and NZD, and I'll be shorting CAD, yen, and CHF, you see. And that will be in line with the analysis that I'm doing here, just in a nutshell. So when we go to the daily, you see, you can clearly see this is our daily high. We've got internal range liquidity right here above this candle here. We've got fair value there, which is a vacuum, absence of volume. That gap there, that's an opening gap. And the gray shaded area, that's our last up close candle on the weekly chart before the expansion. So we anticipate price to find resistance inside this price action, right? So that's on the daily, where we also have that daily bearish order block, right? When we go to H4, which is our entry time frame, right, expect a run of stop. This H4 order block here, this one here right there, you can use this for like maybe your scalps, right? If you're scalping say euro USD, you'll be scalping euro USD to the upside when dollar is trading above inside that H4 bearish OP, and this high becomes a liquidity area, right? This becomes a liquidity zone, right? So we've got internal range liquidity of buy stops. Internal range in what way, Ivan? We've got this expansion here from the high to the low, external range above, external range sell stops below, external range buy stops above. Anything inside in regards to liquidity pools, that's internal range. To the downside, internal range liquidity of sell stops. To the upside, internal range liquidity of buy stops. But now the fact that it's outside our higher time frame resistance zone, it becomes a bit you have to put caution to your shorts. That's why I'm saying it's for scalps in a way, by if it prices trading above and close below. You can already see that right here on this H4 bearish OP, there was a manipulation before price moves to the downside, and in most cases those are high probability order blocks. You wouldn't expect price to trade above that, but the reason that we've got premium right here, chances are very high that we could keep going all the way into the premium zone on the higher time frame before price continues to move to the downside. So yeah, I'm still bearish on dollar index, and I haven't seen anything in terms of technical point of view that is telling me that we now have a change in market structure. I haven't seen that. We clearly need to have, say, probably on the weekly chart, a clear decisive close above, say, 99.42, you see, or even a clear decisive close above 101 probably 102, you see, 102, a clear close above that will signal a bit of reprieve in terms of dollar price action. So yeah, that's pretty much what I wanted to share with you guys in regards to dollar index. Yeah, I'm still bearish, and whenever I see something interesting in terms of price action, I'll be posting on the group so that you guys also can compare to your own analysis. And I urge everyone on the group to share. Just share your analysis, guys. It's not really something that's difficult to do. It can only help all of us in the mentorship. So yeah, short positions on dollar and its correlated assets, USD CAD, USD CHF, and USD JPY, and then longs on Euro USD, Pound USD, and AUD USD, and NZD USD. So we'll be looking for long opportunities on those assets. So yeah, that's pretty much what I wanted to share with you. FYI, take note of this big bullish candle here, or say a price action like that. You see these 1, 2, 3, these 3 candles are all still inside that huge expansion to the downside, to the upside, right? So that's NZD/USD. Higher time frame wise, we are bullish, and we've got this weekly bullish OB. So take note of this, the volume. As long as we are still inside there, expect price to find support for a move to the upside. So in an uptrend, last down close candle before the expansion should provide support, just like here, this bullish OB. That was our last down close candle before the expansion. Then price returned to that level. That's a long entry. So yeah, that's pretty much. So this price action is almost on each and every asset. Yeah, AUD is quite strong. Pound is weak. You can see the pound, we are now heading towards these levels here. That's a weak pound. And then we've got euro, definitely in line with dollar index, only that it's the other way round. So that's fair value gap. So that's a fair value gap right there. It's a fair value gap. We still have a big imbalance down there to fill. Dollar is almost filling up the imbalance. Yeah, dollar has filled the imbalance, but euro is still yet to fill up the imbalance. That's a strong euro. So you'll be just highlighting your draw on liquidity as where is the liquidity, right? So we anticipate price to trade towards those level, and we've got internal range liquidity of sell stops below the current week's low and this old high here. So yeah, that's pretty much about it. Looking at yen is also trading into premium. See, we are heading towards premium into yen. We've got this gap right there. That's our premium zone on the weekly chart. It's a fair value gap right there, and we've got internal range liquidity buy stops above this high right here. We've got internal range liquidity of buy stops. So these are levels which you'll be monitoring to see how price action trades above, and if there is manipulation, you go to your lower time frame H4, H1. You need to see price trading above, close below, and then that's your trigger to go to the downside. And then we've got CHF. Just gonna go to the weekly chart. CHF, there's still a huge imbalance there that price has to trade to, but if you go onto the monthly, you can see there's the huge imbalance on USD CHF. So CHF is quite strong. Then if you go to CAD, it lost ground a bit, but not by much. So we've got Right, price is consolidating on the weekly chart. Then on the daily, there isn't really much. We've got a consolidation going on right there. So yeah, that's pretty much. If you have any questions, guys, you can just send me a message on the group privately, whichever that suits you, that makes you comfortable enough. But I would suggest you send on the group, because someone else is gonna reply and you get to pick pointers from there. Right? So yeah, that's pretty much about it. Keep an eye on Powell's decision regarding on Trump's decision regarding Powell, and keep an eye on the COT report. We need to see a bit of further interest in terms of open interest increasing at a time when the asset is bearish. So yeah, that's pretty much about it. That's pretty much that I wanted to share with you guys, and hopefully you are all going to watch the video. So yeah, if you're new to the channel, make sure you click the subscribe button and make sure your notifications are on, so that whenever I upload a video, you get it straight into your inbox. So yeah, that's pretty much about it, guys. I wish you nothing but the best and happy trading. Thank you.